Okay, we're going to continue our opening bell coverage. Joining us this morning, Jamie Murray, president of the Murray Wealth Group. Jamie, great to see you, and hope you're doing well. It's a market that has generally been finding reasons to buy. We had this inflation report in the U.S. today. If you were in the camp that is worried about price pressures, you could probably find something to quibble about. The market is not. They think there's a tame enough inflation story that the Fed can cut interest rates next month, and so they were risk on once again today. Well, what's your assessment of that?
Yeah, it was really like a Jekyll and Hyde interest rate report or inflation report. You had a little bit of both.
Yeah.
Definitely the headline numbers were good. They came in below expectations. And then within that, you say, well, if you look at the core and super core numbers, those were running hot. And I think super core, which is a measure of medical services housing, was actually stepping up and higher than expected and reversing a trend of downward. And so, that's where I think some of the quibble is. But then within that, a lot of it was medical services, which we've heard about inflation. Obviously, United Health and the big health insurers have been saying the medical costs have been way higher than expected this year. And so I think the market's saying, well, the part that the free market sort of controls and plays the hand in, those are seeing inflation come down. We're not seeing the effect from tariffs, and that's leading to something the Fed's going to go in September.
That's what I was going to ask you about, because, tariffs is that looming story out there. So I feel like people look at a data point or a series of data points to try to determine if there is some tariff tension that ultimately bleeds into a stock market sell-off. The other, I guess, would be just whether or not, we're kind of shifting into whether like a bad news is good news kind of state for the market, since, it was a pretty lousy jobs report, let's face it, a couple of weeks ago in the United States, and then Canada had a bad one. But it was a lousy jobs report in the U.S. that got people thinking that the Fed might cut interest rates in the fall. So,
yeah, and I think we're still a little bit earlier on the how much is tariffs affecting the inflation side. We're seeing a lot of companies eat those tariffs. I think that is, like you said, that's leading to some weakness on jobs, holding back investment. But really, we haven't seen, this is just another data point on the opposite side of, again, like Shopify's report last week was showing no signs of tariff impacts.
Yeah.
We're not hearing anything from the e-commerce players. So, if the tariffs aren't really actually affecting activity, they're being absorbed into the economy. And now as we sort of lap them moving into 2026, some of the other stimulus effects, including potentially lower interest rates, could, I think, take the market to all-time highs.
All right. Well, we'll continue to watch that story. And within the markets, we've got some interesting corporate stories we've also been tracking. Gildan in the headlines, a company that for a while there, the focus was on who was going to be running the show, whether the founder was going to be returning to control. And ultimately, that ended up being the case. There was a boardroom battle with some investors. But now we have this report from the Financial Times that Gildan is at the ready to acquire Hanes Brands, a massive underwear maker in the United States. Any thoughts on that deal, on that potential deal?
Yeah, so we don't own shares in Gildan. We have in the past, but we haven't been involved in the last few years. But certainly this is, I think it's a great opportunity for Gildan to build up some more scale. Hanes, over the last few years, has had trouble on the cost side. They're a little bit different business models, even though there's a lot of overlap. They're both selling basically cotton, t-shirts, socks, underwear. Hanes focuses more on the retail branded side, which comes along with higher sales and marketing expense. You have to keep distribution up. You have to keep your brands relevant. Gildan has definitely played more on the B2B private label side, which comes with a little bit lower cost structure. And so that's benefited Gildan as the low-cost company. And so they're looking to take that low-cost mindset and apply that to, I think, Hanes and bring down their cost structure as well. So it's still early. Like the deal, I don't think nothing's definitively been announced. So we'll have to see what the management team says in terms of synergies. But I think when you take these type of companies, there's a lot of cost and overlap. They'll be able to pull out a good chunk, I think.
All right. Well, we'll certainly watch what happens with that one. Moving from M&A back to earnings, because this has been a good opportunity to assess how companies are navigating the current environment and what we were talking about before, like the trade issue. Were there any standout earnings stories that gave you confidence in some of your portfolio names?
Yeah, so the one name I would highlight is Exchange Income Fund, or Exchange Income Corporation, no longer a fund. This is a company that has a great niche aviation and aerospace portfolio. They operate a lot of northern Canadian communities. They do not just passenger and cargo, but medevac, air ambulance type services. And so they really dominate this landscape across Canada. And one interesting part of the story is this expansion into reconnaissance and surveillance aircraft. And so they're doing work in Canada. They've done some work in the UK and some other countries in Europe. But there's this big Australian contract that we were hoping to hear about that is the tender's closed and it's just waiting to see who wins. I think it's down to Exchange and one other company. And so unfortunately, there wasn't any new news in the release. I think they're still waiting to hear, but that should be another catalyst for the story in the coming days.
But the theme in Canada of spending money to ensure Arctic security and sovereignty, I mean, that is a trend, just as, AI is a trend. Like, people were already talking about, companies like MDA potentially benefiting from that. But Exchange Income could be in a position to benefit from that? Yeah,
definitely. They actually just increased their presence up in northern Canada through an acquisition of a company called Canada North. And this is a company that I think they did a lot of work, not just with the communities, but even the mining and a lot of the activity up there. They have some big Boeing planes that they would fly in from Edmonton and Ottawa. And so Exchange acquired this company. I think there's a lot of synergies that they'll find in this deal as well. And they actually took up their guidance, I think, a little bit higher than the market expected on that deal closing. And certainly further investment in northern Canada would be a benefit to the company.
Okay. Exchange Income, EIC. It's interesting. We've been tracking what the trade uncertainty means for the auto sector as well. And we've got auto parts companies here in Canada that are navigating those waters. Your firm has owned Linamar, correct?
Correct.
Which is actually up this. I mean, even in the amidst all the uncertainty, it's outperforming the TSX itself so far this year. What have they been saying about their business recently?
Yeah, so I think if you go back in time to February, January, when the tariff news was just really hitting the forefront, Linamar was at the time kind of like the poster child of like, this could be really bad. This company manufactures a lot in Canada, some in Mexico, sells into the U.S. Everything under the USMCA, but at the time the market wasn't sure what was going to happen. Despite all the noise and all the back and forth and tariff rates going up, tariff rates going down, Linamar is still operating under the USMCA, and those parts have been exempt despite other tariffs placed on the auto sector in Canada and North America. So Linamar has actually been a bit of a beneficiary from all the tariff noise in that they're not facing any tariffs directly. A lot of their competitors, especially overseas, are facing those tariffs. And now we're seeing auto production holding in well. And so, the stock's getting close to a 52-week high up here, and we think it's going to keep going with their earnings report on Wednesday night.
All right. A lot of good information there, Jamie. Thanks, as always. Good to see you.
Yeah, thanks for having me.
Jamie Murray, president of the Murray Wealth Group, joining us here.